You know how every family has those big, messy disagreements? Well, what happens when that argument is about the future of money itself? Deep inside the world's most famous cryptocurrency, a conflict was brewing that was about to change absolutely everything. This is the incredible story of Bitcoin's civil war.
I mean, just think about that for a second. It's a pretty wild thought, right? That this massive digital thing that seemed so solid could just break. Could a disagreement over ideas get so heated that it literally tears the code and the whole community right down the middle?
Well, that's exactly what happened. In 2017, the what if became a reality. And trust me, this isn't just some dry technical story about computer code. Oh no, this is a story about big ideas, about rebellion, and about a huge bet on what Bitcoin was really meant to be from the very beginning.
Okay, so let's start at the very beginning with Bitcoin's big breakup. To really get what Bitcoin Cash is all about today, we've got to go back to the moment it all happened. That exact point in time where two completely different visions for the future just couldn't exist together anymore. So picture this, the summer of 2017 was a total pressure cooker. In June, you had one group of developers roll out this new software called Bitcoin ABC. Their big idea was simple: make the blocks bigger so more transactions could fit. But then in July, the main Bitcoin network went in a totally different direction, locking in an upgrade called SegWit. The two sides were at a complete standstill, and on August 1st, at one specific block in the chain, the split was made permanent. Just like that, Bitcoin Cash was born.
So you're probably wondering, how is a split like this even possible? Well, it's all thanks to a technical process called a hard fork. The best way to think about it is like a huge change to a country's constitution. It's not a small tweak, it's a brand new set of rules. And once that happens, the old chain and the new chain, they just aren't compatible anymore. They can't talk to each other. From that moment on, they're two totally separate things, heading down two separate roads.
So yeah, the code split. But that was really just a symptom of a much, much deeper problem. See, this fight wasn't really about software. It was a full-blown philosophical war over the very soul of Bitcoin. Was it supposed to be digital gold, or was it supposed to be digital cash?
So you had two camps, right? On one side, you had the Bitcoin folks. They saw it as digital gold, a super secure place to park your wealth. For them, security and decentralization were everything, even if that meant transactions were a little slower. But on the other side, the Bitcoin Cash supporters had a different dream. They envisioned digital cash, something you could use for everyday stuff. Their focus was all about fast, super cheap payments, which meant they needed much, much bigger blocks.
And look, this wasn't some fringe idea. This vision had serious heavy hitters behind it. Gavin Andresen, the guy who actually took over as lead developer from Satoshi Nakamoto himself, basically said that Bitcoin Cash was a return to the original vision. He believed it was meant to be both a great investment and something you could literally use to buy a cup of coffee.
Okay, so that's the backstory, the big philosophical fight. But how did all this drama play out in the real world, with real money? Well, let's zoom forward and look at a really critical moment, March of 2024. This is where that ideological debate got a serious reality check from the market. So, in early March 2024, Bitcoin Cash was not having a good time. The price was hovering around $438, and it was down for the year. The charts looked pretty grim, but some analysts started looking a little closer. They saw something bubbling just beneath the surface, a little technical signal that a comeback might be brewing. And that key signal was something called the RSI, the Relative Strength Index. Now, when the RSI is oversold, you can think of it like a rubber band that's been stretched way, way too far. It suggests that the selling pressure has been so intense, it's probably going to snap back in the other direction. For a lot of traders, this was a flashing sign that a price recovery wasn't just a possibility, it was pretty likely. So this is where the traders started drawing their battle lines. The bull case was pretty straightforward. If the price could just hold on at that key support level, it had the potential to rocket up anywhere from 10 to over 40%. But if that support broke, well, the bear case showed a potential drop of around 10%. The odds seemed to be leaning towards the bulls. So you get the picture, right? The stage was totally set. The technical signals were pointing up, the analysts were getting cautiously optimistic, and the entire market was just kind of holding its breath, waiting for that bounce.
But here's the thing about crypto. Just when you think you have everything figured out, all the forecasts and all the technical charts can be completely blown to pieces in a split second. Sometimes all it takes is one really, really big player to completely change the game.
So, the million-dollar question, right? Did the rubber band snap back? Did all those bullish signs and analyst predictions actually come true?
For a few weeks, it actually looked like it might. The price stabilized, it held that critical support line, everything was looking good. But then, on March 29th, something happened that no chart on Earth could have predicted.
60,000 Bitcoin cash. Just let that number sink in for a second.
That's how much a single person, or entity, what traders call a whale, dumped onto the market. And this wasn't a slow trickle. This was a tidal wave designed to just completely overwhelm buyers. And it kicked off a devastating chain reaction. It's like a domino effect, a total liquidation cascade. Here's how it went down. First, the whale sells, flooding the market with coins. This instantly tanks the price. But the real damage comes next. That sudden price drop automatically triggers forced sales for traders who were using borrowed money to bet on the price going up. Their positions get wiped out, which adds even more selling pressure, which pushes the price down even further. It's just a brutal downward spiral.
So, wow. What do we even take away from a story like this? It's really the perfect example of the complicated, and let's be honest, often chaotic forces that are really pulling the strings in the crypto markets.
This one event just pulls back the curtain. It shows you that a price isn't driven by just one thing. Of course, you have the long-term fundamentals, that whole digital cash idea. You have the technicals, like the RSI we talked about. Then there's market sentiment, how it tends to follow Bitcoin. And then, as we just saw, you have the completely unpredictable moves of giant whales that can just stomp all over everything else.
And that's the core of it, really. This is the constant battle for so many assets out there. On one hand, you have the big, long-term story, the whole philosophical reason the project exists. But on the other hand, you have the messy, chaotic, and often totally irrational day-to-day reality of the market.
And that leaves us with the ultimate question. And it's not just for Bitcoin Cash, it's for anything you invest in. When that long-term story you believe in is clashing with the crazy short-term price action you see on the screen, how do you possibly decide which one to listen to?